Yesterday it was healthcare. Today it's diagnostics. Diagnostic stocks saw what could be called as a gold rush moment after COVID. Testing, compulsions of getting the entire COVID test done and the ancillary tests, and the fact that suddenly there was a lot of demand and there was very little organized supply led to re-rating of these stocks. COVID goes away, competition increases, P investors come in, big M&A happens, and the P multiples gets squashed. But now industry has got average growth. And let's look at the average growth here. I'm just going to set the tone here and then we'll take the conversation forward. What is happening first in the diagnostic sector? Volume growth remains a challenge from the pre-COVID time, but prices have stabilized. Margins are stable. There's no price war, thankfully, like a Reliance Jio moment, but low entry barriers are clearly there. And the market share is clearly shifting from the unorganized player to the organized player. Unorganized player market share was as high as 80%. Now that's gone, that was at as 95%, has gone to now 80%. And the regional chains account for nearly 8% of the total market. So the diagnostic industry is expected to grow in the range of about 10 to 12% or 12 to 13%. And this sector now is almost like a $15 billion sector. So it's a large sector now, and we'll take the conversation forward. Where is the sector headed? Is competition getting brutal? And what will happen to some of the diagnostic stocks now? Gaurav Agarwal, co-founder and CTO of Tata 1mg joins us. I'll start the conversation with that. Gaurav, great to have you back. Thank you for joining us. I guess when I was setting up the entire thesis or the background for the discussion, that introduction itself was the question, which is that at what rate do you think the diagnostic sector in India will grow? And do you think the brutal competition which we've seen in the last couple of days will only intensify or not?
Hi, Nikunj. Thank you so much for having me. I think there's definitely, and I think you summarized it really well. In fact, I was thinking while going through your summary that it's great education for me as well. You're absolutely right in saying that, COVID saw a massive spike in volume growth because it was acute. Everyone needed to get tested. And, there was a halo effect. It wasn't just the COVID tests that consumers or patients needed to get done. But, for most of us, you needed to get your CRP tested and your, D-dimer tested. So there was a huge halo effect, which transcended from just the COVID tests to actually a broader range of diagnostic tests, which sent all the diagnostic players just through the roof. So that's one. The second is that COVID also saw, because it was phasic, it happened multiple times over multiple years. It also saw pricing, change over the years. It started with really high prices adjusted, but then volume growth really took off. And as a result, what you summarized, probably golden heydays for the whole diagnostic sector. A lot of that has gone away. COVID's become, for lack of a better word, just like a seasonal flu. And people are getting back, to testing being normal. And in that sense, I think growth is a challenge for diagnostics sector overall. At least in our view, it will continue to be a challenge. I think there's the one trend that we haven't really started to see, but we are seeing significantly in our businesses, is that diagnostics was set up as, a powerful core industry, which is that you walked into a collection center, you got a basic set of tests done that your doctor recommended, you got your PDF report, which wasn't very helpful for a consumer to understand what's going on with him or her, right? And you walked out. And what we are seeing is that there is massive increase happening in customer expectations on what they should expect out of, let's say, a diagnostics experience, right? So, we are seeing a lot of trends emerge around fitness-related tests, longevity, people expecting more from their diagnostic reports, AI coming in and playing a significant role in helping you understand, what is going on, how do you understand your report, and the report going from not just a pathology, but can I do everything, right? Can I not just do blood tests, but can I also do imaging, etc.? So we are starting to see diagnostics move from this basic, roti kapda makan sort of, to a more experiential serving. And it's in the experiential serving that we are seeing a lot of innovation happen, a lot of demand happening at a disproportionate level. And thankfully, 1MG, because it's been an early start in this preventive wellness and helping you understand better what's going on, and also providing a significantly better experience. We are actually seeing very, very good growth in our business.
Gaurav, so let's understand the organized versus unorganized debate. There are traditional pharmacies which are also giving diagnostic services. There are regional diagnostics which are moving up the value chain. And then there are all India players like, let's say, a Thyrocare management, by the way, would be joining us in moments from now, or a Dr. Lal or a Metropolis, which are expanding their footprint. Suddenly everybody is giving you a reason why you should get yourself poked, right?
Yeah. But no, absolutely. And
just before you answer that question, just think about it. You're in the business of poking others, man. How do you deal with that every morning? How do you deal with that every morning?
No, that's a great question. And, so it's really interesting because why are people getting poked, right? People are getting poked to actually learn something about their body, right? So for instance, I have, let's say, a health and fitness goal, and I'm getting poked to, let's say, take this diagnostic report to my nutritionist, who then says, okay, here's how you need to adjust your diet, your supplementation, etc. So traditionally, or so far, a lot of companies have not gotten into the details of why people are getting poked, right? And I think that we have to figure out that what COVID has done, thankfully, is that it's driven a lot of people to become a lot more, aware of their health and figure out what can be done to actually move them towards health. We're also seeing a lot of, young people, let's say, face fatal health issues very, very early, maybe doing exercise, etc. So the general awareness of how do I get healthier and how do I understand this black box of my body, what is going on, is really becoming front and center, especially for, metros, educated, let's say, professional folks, and even otherwise. So we consider ourselves not in the business of poking, but actually using the poking as one of the ways in which we can help you figure out what's going on and how do you actually reach, and let's say, an optimal level of fitness, right? It's not just one thing, it's multiple things connected together, but diagnostics is a really core portion of that, and that's how we view ourselves.
What do you think, Gaurav, is going to eventually, or rather, who do you think is going to eventually win the battle? Is it about pricing, or is it about trust? Because, you're not going to go to anyone to get poked and get your results, right? This is critical data that you want, and you want to go to someone reliable.
Absolutely. 100% trust. It's not pricing. And I'll just lay out the trust equation, meaning, most consumers are not aware that, the accreditation of a diagnostic lab, for instance, is not mandatory in our country, right? And as a result, when you go to a lab, you don't know if the lab is following basic, let's say, NABL protocols, etc., to make sure that their controls are well sorted out and stuff, right? So at 1MG, we are very proud that we run 100% NABL certified laboratories, every single one of our laboratories, and we run them ourselves, NABL certified. So 100% trust, because you don't know when you go to a non-NABL accredited lab, what is it that you get, what challenges there may be in their protocols and their daily control setups, which may render the reports unreliable and actually make whatever, treatment, etc., that you're going through not useful and maybe even incorrect to some extent. So trust beyond price. However, that said, there's a right price. And at 1MG, we've taken this long-term approach that we have to, without eroding trust, while ensuring that the quality stays really, really high, how do we make sure we right price our diagnostics for the consumer?
It's quite interesting, given that we're all just talking a little bit more about this, and, how we've also seen a number of other players as well spring up. I know you spoke about the trust factor and pricing, etc., but what about dealing with the competitive intensity, even the share of organized players that are going up within the industry as a whole?
No, absolutely. Look, competition in this sector, competition in any sector which, I believe is large, is always intense. I can't think of any sector where the competition is any less intense. But what's happening is that we are seeing a bunch of players again competing very, very hard on the basics, which is you need to get poked. Can I come poke you? Can I, let's say, deliver those services maybe at the lowest price possible? And there's tremendous amount of competition. But the moment you go one level above, where you try to understand, try to improve the experience, offer a better experience, offer a much better quality service. To give you an example, our home collection on time rates are 99.7%, right? We don't think anyone in the industry offers that kind of a service, right? When you get to this level, the competition actually lowers a little bit because these are fundamentally hard things to accomplish. So I think competition is there. It's actually really intense. Most of the competition today is where there's a pricing, let's say, arbitrage, which players are able to capitalize on. The moment you move one level above to experiential tests, or maybe even like high-end fitness tests, which are really low volume tests, you don't see a lot of competition.
Gaurav, sorry, I beg your pardon. We're awaiting Rahul to join in just a bit from now. But the one point that your industry is perhaps after technology, or rather linked to technology, is the one which sees innovation and evolution almost on a daily basis. Now everything is about having to wear, health devices on you, right? Where do you think the industry is going to grow, and where do you think the big breakthrough is going to happen? And then, if everything becomes wearable, could that be a threat to your industry in any way?
No, I think, look, again, industry, you're absolutely right. Our long-term view is that diagnostics is going to evolve into being an at-home industry rather than an at-collection center industry. It's probably going to become, more miniaturized, where you can get a lot of tests done from the comfort of your home, right? And we are seeing that innovation happening on almost a daily basis, like you said, right? You can, for instance, get really innovative strips that can measure. Sort of give you like a urine retrieval result from the comfort of your home, just using a strip and a smartphone, right? So we're seeing a lot of innovation come in. We're talking about what we call point of care devices, where let's say you have a tabletop device that can do HbA1c and lipid profile, etc. So while innovation is happening, I think a lot of diagnostic companies will also drive that innovation forward. We work with a lot of companies to figure out, to work with them to find out, how accurate their testing devices are, and can we bring any of those devices to our consumers and essentially help them get tested at a much more in a much more convenient way, right? So I don't think that I think that definitely you're absolutely right that the industry is staring at a disruption with wearables, etc., coming in. But I also feel that many of us are very well equipped to actually ride that disruption wave and probably drive that disruption as well.
With you. Thanks so much for taking time out, really giving us a lot more clarity as to how things within the sector are panning out, where Tata 1mg as well stands, and clearly a massive uptick in customer expectations, and trends are a lot related around fitness. Related tests, demand is at disproportionate levels. That's the word coming in on the diagnostic deals. Let's just quickly check.
Then with our discussion on what really is the future of the diagnostics universe, you just heard from Tata 1mg, Gaurav Agarwal, the co-founder and CTO. Let me now welcome on board Rahul Guha, the MD and CEO at Thyrocare Technologies. We also have with us Sriram, Iyer, the CEO of Apollo Health and Lifestyle Limited, joining in on the show right now. Gentlemen, both of you, thank you so much for joining in. Rahul, if I could, start the discussion with you here. The kind of tugs and pulls that we've seen within the entire diagnostic space, where a large share of volume still remains high, price competition is the one which has sort of cooled off, but still is very, very competitive. How do you see the industry set up for now, both when it comes to the volumes, the demand and pricing?
Yeah, thanks so much for having me, and good morning. Just look on the overall growth prospect of the diagnostic sector. If I look at India, healthcare in India is underpenetrated. Diagnostics in healthcare is underpenetrated. Organized diagnostics within diagnostics is underpenetrated. So by whichever metric you use, there is so much under penetration in healthcare, diagnostics, and organized diagnostics. But I think we're a far, far way away from saying that, there is no more headroom for growth. I think price competition will happen. Competition will increase and is most welcome in this industry because it only raises the quality of diagnostics and organized diagnostics in the industry. But I think healthcare is an ocean in India. In healthcare, diagnostics is an ocean. And it is really an opportunity for all players to really help Indians manage their healthcare better. There are so many people having strokes, heart attacks at very young ages, which can easily be prevented by the right diagnostic tests at the right time. And so I think healthcare is an ocean. So, yes, there is competition, but the opportunity is outside and enormous.
Oh, okay. So clearly looking at a pretty strong opportunity as a whole within this space. Wanted to also get in your perspective in terms of the price war. Do you think now that perhaps the worst is behind us when it comes to the price war?
Yes, I think so. I think almost every online player has reached more rational levels of pricing. To be honest, the price war was largely limited to tier 1 and metro markets. As you move outside, most of the diagnostic, the new entrant or the new age diagnostic players are not present. Thyrocare, for example, 80% of our business comes from tier 2 and beyond, where frankly speaking, we didn't see any of this price war, right? Most of the price war was largely in metro and tier 1. The opportunity in tier 2 and beyond is quite significant and continues to be there. And that remains our focus as a company.
Let me get you in as well on this, given that we have seen lots of tugs and pulls, a wrestling of a larger share volume that continues to remain high. The price competition may have cooled off a tad, but what is your diagnosis, if I may, of the industry as a whole? Sriram, that question is for you.
Okay, hi. Okay. So thank you for having me here. So as rightly said, the prospects are quite good for the industry. See, there are two things. Obviously, the penetration of healthcare is quite low. Diagnostic is the first point of really getting, checked whether, before you get into the further treatments in healthcare. And as all of you are aware that more than 80% of the market is still unorganized. Less than 20% is between the national and the regional players. So there is definitely a headroom for growth, and the prospects look brighter, and the awareness is really going up. Preventive health checkup is becoming the key now, and there is a lot of work happening in the healthcare space for consumers to become more aware, to get themselves tested, and it's a big role that everyone is playing here to really ensure that most of the population gets early and correct diagnostic at the right time.
Okay, fair enough. What about your outlook on generic testing? Because that, Sriram, as well, seems to be gaining quite a bit of traction. Do you think that there's going to be significant growth within this segment?
Oh, absolutely. So genetic testing is actually, driving the trend towards personalized, personalized medicine, and basically tailoring the, specific diagnosis to that particular individual or to his and her particular health conditions. So that is definitely the way forward. It has just started taking some traction, but going ahead, we see genetic testing really will start taking more and more shape for two reasons. Number one, it is specifically tailored to the particular individual's needs. So the individual here can really take a calculated call, a very informed call, a very proactive call on his health conditions. And it is not alone about really his health. It's about lifestyle. It's about what he or she is allergic to and how they can really manage their health better. So genetic testing definitely has a future. The work has started. There's a lot of data points available as well to really do some sort of a predictive modeling as well, saying at a particular cohort, what are the kind of tests that are required to be done and what could somebody be at a risk of in future. So not only genetics, but with the AI overlay over it, it really makes up for a very beautiful, use case that we all have, which I think is definitely getting traction. It's quite low right now. It's gaining traction, but going ahead, as I said, it's personalized to the particular individual who's taking it. So one can be really far more proactive about managing one's health.
Rahul, Nikunj also joining in. आपसे ऐसे मिलना नहीं होता है. We're meeting on a TV show. How you been, my friend?
I'm very well, Nikunj. How are you?
Rahul, even though the market right now is 80% unorganized, and unorganized market players are losing market share, they don't have complexities of services to provide, yet that is not getting translated into the real growth numbers for the industry. I mean, if I look at the GDP growth and the nominal GDP growth, the sector which has potential to grow at a much higher rate than the normal GDP growth, it is actually growing in line with the nominal GDP growth, Rahul. Why is that?
So there are 2 points, Nikunj. One, I think, firstly, in healthcare and particularly diagnostics, there's no catch-up effect, right? So it's not like if you have been postponing a car decision for a couple of years, then once a post-COVID happens, you go out and buy the car and you see a rush in terms of growth, right? If you do an annual health checkup once a year, if you skip 1 year, you will still do one the next year. So there's no real catch-up effect. So the industry actually is coming out of the COVID effect and all of that. If you see, for most companies, at least the listed players, the non-COVID volumes have been reasonably healthy. Of course, still not back to the pre-COVID levels, but coming close, I would say. Particularly if you see the last couple of quarters, most companies have recovered to, a pre-COVID kind of growth rate, maybe 1 or 2 points behind that. As we look forward, as I said, in tier 1 markets and metro, there are many new entrants. And as I said, there is a fair bit of competition. Even though everyone is now rationalized on price, there are still many more players than there used to be in Mumbai, Delhi, Chennai, Bangalore and such. I think the market is really outside of the metros at tier 1. And companies that have geared up with their go-to-market there will enjoy the benefit of coming with better growth. But of course, expanding into tier 2 and tier 3 takes time, right? And it requires you to set up your network of franchisees and all of that. So I think we are in that, bottom of the U. And as companies have invested, and almost every listed player has said that they're investing in tier 2 and beyond. As our networks scale up, I think we'll be back to the original in historical industry growth.
When a sector is growing and when competition is growing, prices for basic blood test, they always tend to come under pressure. A, there is technology. B, there is AI. C, there is advantage of scale. How do you see pricing for the basic bread and butter diagnostic businesses and services moving now, which actually account for nearly 60 to 70% of the total revenue for most of the diagnostics chains? That's the reason I'm asking this question.
Okay, so this for me, I guess, so I'll take this up. So I think, as you rightly said, yeah, the routine test, the one that you really said, they account for a chunk of the volumes here. And I see, while there has been some sort of a pricing salience, but I don't think prices on those particular entry products have really gone up dramatically. There are still what it is. And we also have to understand in India, while, as you rightly said, see, less than 20% is through organized and non-organized. There's a huge chunk which is unorganized. And most of the unorganized players, they typically work because on the pricing factor. So if you are actually overpriced, then there's no way that you're really going to get some share of business there. But a lot of companies, in addition to promote some of these routines, have also got panels or packages or preventive health packages, right? Those are the ones that really offer not only 1 or 2 particular tests, but a very wholesome solution that covers the entire body, right? From a basic test to a very comprehensive test. And some of these are quite attractive as well. And that's what we really see a very uptake happening, for some of these tests where consumers come and see value for some of those tests. So they might as well get themselves tested, not only for a blood, but for a cholesterol, heart, liver, the entire body per se. And that is what we really see is the thing that's happening now.
Rahul, specifically for Thyrocare, it was always this mass service provider. Mr. Vilumani used to explain this entire model brilliantly, which is that they are the back-end kitchen for the Indian diagnostic sector per se. Post the change of guard, Has the Thyrocare model changed? Would you be looking at revisiting it, or you're evolving it differently?
I think Dr. Velumani had set up a fantastic model, right? And it was B2B focused. And we continue to remain true to that ethos. From an overall strategy, we remain a B2B company, and we believe that is our forte, to remain the kitchen of the diagnostic sector. The only thing different is earlier, while we were very much focused in the offline space, so a large part of our pathology partners were mom and pop pathology labs. Over the last year and a half, we have tied up with almost every single major online player, with Pharmeasy being our, of course, primary customer, which is also our parent. But if you name the online company or even the new age healthcare chains that have come out in the country, almost all of them use Thyrocare as their kitchen today. So I think, yes, we remain true to our strategy of Dr. Velumani's, which was to be a B2B player. But we have expanded the scope of our partnerships. And we now not only look at offline single mom and pop chains, but as I say in our mission, it is anybody who wants to serve their patient with diagnostics, whether you're a single doctor, a hospital, a health tech chain, or a pathology lab, Thyrocare is your partner.
The time when Apollo was looking at listing the diagnostic business seriously, but that was just after COVID. Are you looking at revisiting that point again, Sriram?
No, we definitely have plans for that, but not in the near term. Right now, we are growing pretty well. Our growth rates are much better than some of the peers, and I think we have a good headroom to grow further, and we have a plan to expand as well. So I think we have still not reached at a point where we would want to go and go to the market and and go for a listing. But that's definitely there in the plans for the future, not right now.
To go back to the very basic big picture, and I'll ask the points again. For next 3 years, do you expect a mid-teen CAGR growth with sustainable margins for the entire diagnostic sector? 3 to 5 years, do you think that trend is real?
I feel the industry will return to its original growth. I think between 12 to 15% is a realistic expectation from an organic growth trajectory, while keeping margins stable.
Rahul, a big M&A is round the corner, because we've seen that happen to the hospital chains. We've seen that how PE players have come in and how they've really changed the entire landscape. Do you see a similar kind of a pattern which could emerge also in the diagnostic space, Rahul?
Absolutely. I think M&A is, as the markets get, at these levels of valuation, M&A always makes sense because of the multiple arbitrage that you get. So I think, and as I said, and as Sriram said as well, a large part of this market is unorganized. This is a good time to actually evaluate a roll-up play.
Your understanding of the growth numbers for Apollo Health for next 3 to 5 years, approximately, not a specific guidance here, and for the industry. Sriram?
No, so we are quite bullish and buoyant what lies ahead. As I said, it's a great brand that we have. It has a very good recall among consumers, and we offer the highest quality of clinical service, testing, interpretations of the highest quality. So we are quite buoyant about what lies ahead for us. As Rahul said, a mid-teen growth for the industry seems more likely. Margins definitely, we have seen a lot of players taking the price up in the last 1 to 2 years. The margins are definitely under pressure, and I think, holding on to the margins and keeping it stable would be the way to go. And the growth and the strategy for Apollo clearly is to really grow volumes, right? I mean, you see players today. If you see some of the top players, and if you look at the growth rate in 10 to 30%, most of the growth is led by price. We would prefer to lead by volume, and that is clearly the plan for us to really expand. There's a market available. There is a shift from unorganized to organized. There is a huge awareness, as I said, that is coming up. We have a great brand. We have a very wide reach. I think all of this comes together. We are quite bullish for the next 3 to 5 years.
Today's interaction with three diagnostic firms. Sriram, Rahul, gentlemen, firstly appreciate your time and thank you for joining us. Well, the gold rush in the sector is over. The peak P multiples, what diagnostic stocks were commanding immediately after COVID, where they were trading at P multiples of 70 times, 80 times, because of additional testing, which was a one-time gold rush because of COVID, that clearly is behind us. But the price collapse, what we've seen because of M&A, increased competition. For example, 1mg got acquired by Tata, they moved into the same business. You've got NetMeds, which was acquired by Reliance, that moved into the same business. Hospital chains, they started building the diagnostic centers like, for example, Apollo and Fortis, and even, Bombay hospitals like Beach Candy, which I can speak about. They all started making their diagnostics and services big. But the sector, in a sense now, is a sector where competition has intensified and price have dropped. But the growth, I guess, somewhere will now come back to normal, which is that 12 to 13% or 14 to 15%, depending on the base and the cut of the year you're looking at. Pricing will start evolving, but from a market standpoint, some would say that these are the stocks you should buy only when there is a drop down in the market, because that big P expansion phase in most of the diagnostic stocks are over. These are businesses which are growing without capital, unlike hospitals which require a lot of capital. These are sectors which are unlikely to come under regulatory preview, so the pricing problem will not be there. It is only when competition settles down, few M&A happens, the sector will start evolving again, but I think we are still a distance away. So at best, I would say that this sector, which was first a massive outperformer, then became an underperformer, now has potential to be a pure, simple market outperformer, pure market outperformers. It's more like a sector where you would say, in brokerage terminology, no underperform, no outperform, neutral.
Okay, work in progress is what we're calling it. We'll take a very quick break on that note. Come right back. Lots